Please join us in welcoming your conference MC, ABA's Ryan Rasky.
Well, the first day went by pretty fast, I would have to say. And we're going to end today with a topic that sometimes is feared, but also could be admired, depending on your point of view. And of course, I'm talking about AI, which we've heard quite a bit already integrated into several of our conversations. But before we get into the next session, I just want to give you a quick heads up. This last session that we're about to have is going to last about 45 minutes. And then immediately afterwards, we're going to have a brief award ceremony, followed by a fireside chat, which is going to focus on advancing your career. So you're definitely not going to want to miss that conversation because it's going to be a good one. So the first session, because AI is such a focal point here at RCC this year, I asked AI to answer the same question that I asked it last year at last year's conference. What are the top risks AI present to banks in 2026? And it came up with three main answers. The first one, which I don't think is going to surprise anyone, is the first risk is going to be AI-enabled financial crimes operating at real-time scale. Basically meaning the speed at which fraud, cyber, money laundering risks are converging on customers and transactions at a rapid pace. And the exposure that our banks are feeling are actually very huge. So no surprise with the first one. The second one was concentration and dependency risk across third parties. Also not too surprising because we as banks have very heavy reliance on cloud providers, core processors, payment platforms, and all of that interconnectedness can impact customers and access to payments pretty rapidly. The third and final one was a rapid shift in federal priorities. And this could be considered a stronger focus on AI governance and also the outcomes, the effectiveness, and defensibility of AI. So for all of us here at RCC, this means we have to move beyond just AI adoption and more towards AI strategy and accountability. And this is a great way to lead into the next session, which Joanne Barefoot will introduce her panel for. Joanne Barefoot is the CEO and co-founder of Alliance for Innovation Regulation, or otherwise known as AIR. She is a leading voice on modernizing financial regulation through technology and responsible AI. A former deputy comptroller of the currency, she brings deep experience in bank supervision, compliance, and financial innovation, and advises regulators and financial institutions globally on improving regulatory effectiveness and consumer protection. I also need to say that as a fan, and I had dinner with Joanne last night, she runs a podcast called Barefoot Innovation, and her 250th edition or release is coming up here shortly. Hasn't been released yet, but we're eagerly waiting to hear it. I'm a big fan, and if you haven't listened to her podcast, I would encourage you to do so, especially around technology and innovation. She is cutting edge and leading the conversations on all of this technology. So please check it out. And I'd also like to mention that this session is being recorded and will be released as a podcast under her channel as well. So without further ado, I would like to welcome Joanne Barefoot, who will now introduce her panel. Joanne?
Thank you, Ryan. I'm so delighted to be here, and I just want to say kudos to the ABA and Ryan and Dorothy Friedlander for putting together an amazing agenda this year. From my perspective, I'm thrilled to see it is infused with tech and AI particularly, and I do think these are going to be the dominant issues. We are so excited to have this panel. So we are three people. I'll have my guests introduce themselves in a moment, but we've all worked for a long time in the financial sector, the regulatory sector, and the tech sector, and we're still working at where the three touch. And as we, and that puts us in some ways, I think, at the front end of what's happening on the technology change that's developing. And so we're going to try to bring you our perspective on what that's going to mean for the work that you're doing. We've known each other for 10 to 20 years, something like that. We all know each other, so hopefully we'll have some fun. And I just want to start with the premise that compliance and risk management in a bank are extremely hard. You know this better than we do, but it is very, very hard to get things right in these big, complex systems. And the essence, if we sift it down to the essence of the work that needs to be done, you're trying to see into complex, often opaque systems that are changing rapidly and understand what is going on in them, what risks might be emerging, what problems might be taking seed, and figure out what that means to you. And it's getting harder, mainly because the tech is changing so fast. Luckily, we're living at the best time in the history of humanity for trying to understand what's happening in big, complex, opaque systems that are in motion because we have the advent of these new forms of AI like large language models and generative AI. So we're going to talk about what this means, the risks, the problems, the hype, the opportunities, and so on. And I want to start, Raj, asking you to introduce yourself. You're the managing director of Fenway Summer, among many things that you've done. Tell us about the journey that brought you here.
Well, thank you. And thank you to ABA, and thank you, Joanne, for the invitation. And congratulations on your 250th podcast episode. I was, by coincidence, your first podcast episode. And I have wondered for a long time, I was so terrible. And I wondered, how many episodes will it take for Joanne to forget how terrible I was? And the answer is 250, right on the nose.
Raj had just left the CFPB, and I walked from where I was living to your tiny little basement, old ancient flat in Georgetown, and I brought you coffee, and we sat in the basement.
That's probably all the coffee we could afford in those days, so I appreciate that. Just by way of background, I'm an engineer and a lawyer by training, but somehow never really did either of those things. I was depending on your point of view, either have spent or wasted my entire career in financial services. I was a consultant to, investment banker for, executive in, regulator of, and now investor in financial services firms, banks, non-bank, pretty much everything you can think of in the US in terms of sectors and financial services. Along the way, I spent a bunch of time at McKinsey's financial institutions practice, at Capital One. I was the acting director and deputy director of the CFPB, and have, for the last 13 plus years now, run a firm called Fenway Summer. I try to split my time roughly in equal components between investing venture capital money at Fenway Summer. I'm also a senior advisor to our affiliated advisory firm, which is called FS Vector. I am the trustee of something called the Fenway Summer Charitable Trust, which actually sounds like what it is, unlike everything else I do. And then I'm also a campaign spouse. My wife is running for Congress in Colorado, and so I smile and shake hands and try not to get in the press.
His wife is Jessica Killen.
Look her up. It's, again, a real pleasure to be here, and for better or worse, I really have spent a bunch of time at the intersection of finance and technology and regulatory matters and talent, and my guess is we'll touch on all those things today.
Great. And Konrad, you are the founder of Claros. Tell us about your journey, former regulator also.
Yeah, I was thinking, I've checked a lot of the same boxes that Raj has, but first let me echo Raj in saying that I really appreciate the opportunity to be here with you, so thanks to you and to the ABA. I'm looking forward to this conversation a lot. Yeah, I started as a lawyer. I too was trained as a lawyer. I actually practiced law for almost 2 years.
Something I noticed in your bios that I did not already know is you both went to Harvard Law School.
I'm sure we were the same year.
There you go.
No. Practiced law briefly and got sort of interested through that opportunity, that experience in the savings and loan crisis, which led to work on the Senate Banking Committee on the resolution of the savings and loan crisis, which then became a springboard into regulation. I went to the OCC Was the #2 official there during the first Clinton administration, and then came out to the West Coast and held senior executive roles, first in the mortgage industry at Golden West Financial, and then in the credit card industry at Providian Financial, which we used to think of as America's foremost troubled financial institution. And when we had finally turned the corner at Providian and things were settled down a little bit, I had an opportunity to help launch the Promontory Financial Group, and I opened that company's San Francisco office and ran their practice on the West Coast for 10 years, and then for my sins came back to Washington to be the chief operating officer for a couple of years until I couldn't stand it anymore. And then went back out to the West Coast and actually was the COO at a small AI regtech startup. That was back when AI meant machine learning. It was a different AI than we're talking about now. And did that for a while, and then became the chief banking officer at Green Dot Corp for a couple of years until I decided to get married and didn't want to commute to Southern California anymore. So hung that up and started to launch Claros.
Great. And you're doing work on, Raj, I know you're looking at new enterprises all the time, and your role as a VC, and Konrad, you are, I know, working with a lot of the really sort of cutting edge companies that are trying to become a bank or, you know, make a space.
Yeah, I mean, our practice at Claros is, in contrast to the work I used to do with mainstream banks when I was at Promontory, our company is really very focused on highly innovative financial services businesses. The majority of our clients are actually fintechs. We do a lot of work with the banks that partner with fintechs. We have an increasing amount of business with mainstream banks, but really it's still fintechs and their partner banks that are the core of our practice.
So let's start by getting your take on the scope and speed of the change that's underway here. Everybody knows AI is coming fast. We also know that a lot of it isn't solid yet, and it's changing every few months. I have a friend in the tech world who recently said to me that December 2025 will go down in history as a massive inflection moment for technology, because that was when they had the breakthrough with the open claw activities, and suddenly everybody was doing everything differently. Even the people who are full-time head down in this space are constantly being caught by surprise. So we won't hold you to your answers because nobody knows for sure. But if you were going to guess 2 years from now for the type of work being done by the people in this room, the risk managers, compliance leaders, and regulators too, is their work going to be completely different 2 years from now? Or a little bit different? Are we going to have incremental change, transformational change? What's it going to look like if you had to guess? Raj, do you want to start?
Sure. There will definitely be incremental change, and indeed it is already underway, whether people admit it or not, using large language models to be able to expedite heuristics that people already do. Picture a bunch of workflows that already exist, just finding faster ways to do the same stuff. That's already happening, and it's happening all over the sector, probably in ways I would bet you more unacknowledged than acknowledged at this point. Now, sooner or later, that will run into a little bit of an obstacle for almost everyone within the regulated sector, which is about, well, gosh, don't you need some kind of, one of the features, I would argue, of foundation models is certain black boxiness to things, and that just doesn't really work, I don't think, in a regulated environment. And so already, sort of the firms at the vanguard of this first horizon of incremental change are already taking steps to make sure that there's a level of explainability through chain of reasoning and some kind of auditability, even for relatively small bore tasks that are already being deployed to AI. The big question in the next couple of years is whether or not we can make a leap to fundamentally doing things way differently. So for example, we're investors in a firm called Prism Layer that is looking to make the creation of risk assessments, picture in any ERM function at any bank, something that there's really no reason for a human being to take the first draft of. And to be able to do that, you've got to marry up both, on the one hand, a sound understanding of a firm's own risk methodology, but also, like, sort of the science of AI architecture to make sure that that methodology is encoded within, what it is that subagents are going to do. That's actually pretty hard for, I bet you, 95% of banks to be able to pull off on their own. It's not just a talent question, it's also a cultural question. And I don't know whether or not that will happen in the next couple years. My hope is that it does, but we will find out. We can talk about later about what some further out, sort of Horizon 3 changes might be.
Yeah, I'd like to do that. Conrad, what do you think in the next 2 years? Or pick your time frame, but revolutionary or evolutionary?
Yeah, I think I tend to be evolutionary rather than revolutionary
I think it's going to be revolutionary for what that's worth.
But I think 2 years is an interesting time frame to look at. When I don't know that our clients are representative of all financial services, but when I look at what our clients are doing, I see a lot of investment going on. I see a lot of different kinds of solutions being put in place, mostly around problems that I would think of broadly as sort of involving discovery challenges. You've got to collect a bunch of data, and it's usually unstructured, and synthesize it into something that is structured so that a decision can be made. And there are a lot of different contexts where problems of that nature are coming up, and AI is pretty good at that. But I also think a lot of the investments that are being made are a little bit random. And so my expectation is that 2 years from now, a lot of our clients will be in the position of trying to rationalize a bunch of investments that don't necessarily sync up all that well. Because I think there's a lot of opportunity, even though the AI can simplify processes, you can make your tech stack vastly more complicated by introducing 20 different rifle shot solutions to 20 different problems. And that ultimately becomes a source of risk in itself. And so I think we'll see a lot of attention to that kind of problem down the road.
And indeed, the complexity and risk that you point to, a big unknown even over the next 2 years, is that there will be a problem, and it will seemingly come out of nowhere, and it's very hard to anticipate right now what sort of the corporate industry, regulatory, and legislative response to that problem is going to be. I have been on the board of Circle, the stablecoin issuer, for 13 years, and so I have grown accustomed to the crypto industry basically imploding every 18 months or so. If there is a significant event right now, I think, I don't know exactly what the response would be. But I think it's more likely than not, there will be something that goes pretty wrong before everything goes smoothly.
Well, and apropos of that, it's worth noting that AI is massively unpopular, right? So if you had a significant event, the possibility of a political backlash is not remote.
What's your sense of why so unpopular? Is it shut up already about your AI, or is there something more profound?
I think probably, and speaking from experience in my family, there are people who are just kind of tired of hearing about it. So the shut up already phenomenon, I think, is real. But I also think behind that, there is a lot of fear, right? People are worried about losing their jobs. They're worried about the economy being transformed in ways they don't understand and into something where they might not have a place.
Yeah. So let's look at today. What are you seeing as the most important use cases that are emerging, especially for risk management and compliance, although if you want to touch on other things that these folks are going to need to manage the risks, arising from. What do you think are the biggest changes underway? Konrad, start with you.
Well, I think I already mentioned the one where we're seeing the most kind of traction, right? So there are a lot of different problems out there that take the form of a bunch of unstructured data has to be looked at. It has to be synthesized. It has to be teed up for some kind of a decision. You see this problem, and we could be talking about vendor onboarding. We could be talking about various kinds of risk assessments. We could be talking about reviewing transaction alerts. They all have this general form. A lot of consulting work has this form too. You put out a discovery request, and you have to have smart people look at all the information that comes back and synthesize it. And AI clearly has got great potential to help with that. And I think there's no question, I think most of our clients are using AI in sort of discovery context pretty successfully. I think we're seeing more and more clients trying to use it in more of a decisioning context. There's a lot of apprehension about that. I think people are worried about what happens if the decisions aren't right, what their liability might be. So there's more caution around that, which you would sort of hope for, and which we are seeing. And then I think the third area, which is turning out to be harder, and somebody out here will tell me they've cracked the nut probably, but you know, the use of AI to actually generate meaningful documents, right? So if you're running a compliance shop, you've got an enormous burden of updating and creating policies and procedures, and you're looking at, and that's, we see clients trying to use AI for that. We've tried using AI for that, and frankly, the results are not satisfying, and they're not very close to satisfying. So maybe that will come along, but I think the lesson that I'm taking from that, and I don't think it's a very surprising one, is that there are certain tasks where you really need a human brain. You know, AI can write something that looks like a policy, but if it isn't appropriately tailored for your operations, adopting it will just put you in a position of non-compliance immediately, which is not a good outcome for any client of ours. And so somebody actually has to engage. AI doesn't know your operations, and it's not going to develop the detailed knowledge, and it won't also have the kinds of cultural insights that let you know, how precise do you need to be in order for people to understand and make a policy actionable. So I think it'll be a long time before we see really good AI solutions in that third category.
How about you, Raj?
I don't know, but let me pick up on this third item that you mentioned, which is the ability to be able to inculcate within AI models that are used some appreciation for history of the institution, its approach to risk, its tolerance for risk, its governance methodologies. Being able to marry that up to a still very fast evolving AI architecture is no mean feat, not just because the skill sets tend not to exist in a single human brain, but also because it is just culturally not like a muscle that has been exercised very much. It reminds me of when I was at Capital One, we were fond of thinking of ourselves as being very clever. But one of the things that we did that was, I thought, pretty distinctive as I got to know other kind of credit operations around the country was that we really put into one place the responsibility for simultaneously managing kind of marketing, spend, and analytics, and credit analytics. Because you kind of can't optimize for one without the other kind of thing. And it's not like that was some gigantic insight, but to be able to graft that culturally onto an existing institution, especially one of size, essentially was impossible to do. And my sense is that is going to be kind of what we're going to be confronting with here. We have to be able to culturally, kind of bridge this divide, somehow navigate the seam between those two domains. And I'm finding it hard to believe that institutions that matter are going to be able to do that well over the near term.
Mm-hmm. Yeah, I mean, obviously the profession is about risk management, which includes risk aversion, and yet we're all grappling with the reality that it's becoming risky not to go forward. Standing still is risky, so it's going to be hard. Let me turn that last question upside down. You already both touched on it, but in terms of areas where maybe there's a lot of hype around AI possibilities in this space that you're skeptical of, anything you would add to what you said before where maybe people should be extra, take an extra beat?
Well, let me suggest that rather than addressing a particular thing that seems like, because my day job is basically deal with things that mostly sound like hype, but let me talk about sort of what we haven't really been able to anticipate yet, which is the second order effects of things. So for example, I don't know about you, but my inbox, which used to be a pretty useful thing, has become almost completely unusable because the ability to generate things that are just plausible enough to get past a spam filter and actually cause me to look at for 10 seconds, it's just way too big of a number. And indeed, in our early days, when you were in the basement of our Georgetown townhouse, I prided myself on the fact that we would take any phone call. If the phone rang, you both know Mitch Hochberg, who was at that time one of my founding partners at Fenway Summer, and he was religious about it. When the phone rings, answer the phone, because we are responsive, it doesn't matter. And I used to take pride in the fact that, you shouldn't have to already know a venture capitalist to get venture capital money. That seems sort of like a weird, exclusionary, bizarre thing. But now, I'm to the point now where the second order effect of all this AI marketing kind of stuff, I only take warm introductions. Like, that's sad. That's something that is affirmatively worse now by virtue of the advent of what I'm sure on paper seemed like a wonderful advance. And so we have to be mindful about that institutionally. Individually, as any given person, I think the risk return is pretty stark at this point. Like, you kind of have to be experimenting with stuff just to know what's what and have a sense, just kind of a BS detector of your own. Because one way that things could play out is you could end up with, essentially the human content of any fixed quantum of risk work going down by 2x. I could see that. Which means that if you want to be part of that, you can't be starting from a standing start. And I say that as something like I'm very solidly in my mid-50s now. Believe me, there's a part of me that would say, surely I can be retired before this is like relevant to me, but apparently not. And I think that's true for most of the people in this room.
Konrad, do you want to add anything on the hype topic?
Yeah, so amen to everything you just said.
Remember, though, the AI is going to help you weed out those fake things, too.
So far, I'm losing that battle.
It's coming, I think.
I guess maybe on a slightly more positive note, I don't want to overstate. Positive is not my forte. I do think, when I think about risk and compliance jobs, like the stuff that is getting automated, the stuff that AI is really good at, the discovery stuff I mentioned, that's not very interesting work, right? In the consulting business, we've done some work internally. We estimate that about 40% of the hours on a typical project are going into just reading and understanding documents. And we have to hire expensive people to do it, and it takes a lot of their time. And, they have to sleep, and they get tired, and they need to eat. Sometimes they miss stuff, and so there's a lot of operational risk associated with that process. And, it's a necessary part of the job, but it's not the interesting part of the job. The interesting part of the job is, like, once you got that understanding, now you got to think about, like, what does it really mean? And to the extent that AI enables at least the senior people to focus on stuff that's interesting and meaningful and impactful, like, that's terrific. And I welcome that. I have glimpsed it a little bit in my own professional work, and it feels really good when it happens. I do have questions about where's the next generation of senior people going to come from if we don't have junior people learning the hard way, and that problem remains, like, at least in my mind, unsolved. But I think there are some really positive aspects of this as well.
I would just to like key on this this notion of like the parts of the work that are the most drudgerous really might be the first to go away, and indeed already are. Leads me to have some optimism about the efficacy of first-line efforts across the sector. I have the advantage of having these lights in my face, and so I can't see people's faces, so I will just say things. And one of the things I have noted is that like first-line work across most institutions, when it comes to risk, is really not very good. And the reason why second-line budgets are as big as they are is that somebody actually has to fix all that.
Yeah, that's
And
right.
part of the reason is that that first-line work is actually not as good as it should be, is that people hate it. They hate it. And so the faster they can stop doing it, the better. And I don't blame them. I was once a human being too. And so, I think that actually has some potential, to be what we all picture when we think about kind of three lines of defense actually working around.
Would it be a positive in your judgment if first line could stop worrying about risk because the AI is taking care of it?
No, that would be quite bad. But I think that being able to help people in first line crystallize and have a better handle on faster cycle times, what the risk contours look like, would be a huge plus.
Gotcha.
I mean, the problem to me is mostly one of cycle times and timing. Like, people actually do make business decisions much faster than they used to, mostly for the better, I think. But risk cycle times are not that much shorter than they used to be. And to the extent that lack of linkage is there, sooner or later you're going to run into trees that you could have avoided. Mm-hmm. And I don't see that easy of a way to fix that without arming kind of first-line risk people with the kind of tools that will allow them to accelerate kind of iterations on things.
I think it's possible that the first line and also the examiner will end up with such good tools that will really be nipping problems in the bud and maybe get away from the remedial work that is so expensive and so, right now our system, no bank can catch all its problems. I mean, there's no such thing as a perfectly clean bank examination. I mean, if somebody's ever had one, let me know. There's always issues to deal with, and despite best effort, there's never enough resources to look at everything. But if we could catch problems early, bring them to the experts, like the people in this room, to figure out how to manage them at an early stage, and then you wouldn't have them accumulating in your systems and then suddenly getting jumped on later and because that's one of the big costs in the compliance world, is those look backs. And I used to be a consultant, our firm enjoyed a nice income based on helping banks do that kind of work, It could be really transformative. Also, one thing I want to say on the efficiency issue, one of the agencies a few years ago calculated that its examiners were spending 400,000 hours per year doing data entry into spreadsheets. And I made a stab in my mind at what that might have been costing. It was a lot of money. Those, as you just said, Raj, some of that work is going to go away. And then we'll have the opportunity to have good information in the hands of the people who are really putting that information to use.
Yeah, and no one will mourn the death of that piece of the work,
yeah,
right? Like,
exactly.
no one craves, oh my gosh, I can't wait to get these 100 PDFs and look at the same field and put it into something else. I mean, that's insane.
Yeah.
In the same way that even today, there are plenty of people in this domain, but also more broadly, who are already automating in a pretty lightweight way. Okay, I got to go to this system and get these 3 fields. I'm going to marry it up and sync it to this other thing, and I don't want to log in twice.
And they don't talk to each other. Yep.
And all that stuff is a lot easier. It does pose the question of, will this obviate? When you talk to people who are maybe have more ambition than I do, they talk about, well, we can reduce the amount of overlapping, sometimes conflicting policy sludge that exists through the use of AI.
Yeah.
And paradoxically, the use of AI tools from a first, second, third line and regulatory perspective might mean that maybe the sludge isn't so bad. We'll just deal with it because now, the marginal cost of dealing with it is just lower than it used to be. That would be a shame from my point of view, but I could totally see the world going there.
Let's talk for a moment about agentic AI. I think that's one of the hardest pieces to get my own head around. We know that we're creating agents, and now they're creating their own agents, and they're managing groups of agents and putting solutions together in risk management and also in financial products and services and channels. How are you thinking about how that's going to evolve? How important is it? I mean, we know, I think we all have a mutual friend who's trying to build a bank for agents. And then you're going to have to figure out, know your agent. Is this agent actually authorized to represent Konrad Alt? And how are we going to know that? And who's liable when something goes wrong? And, all this kind of stuff is out on the frontier, but it seems to be coming fast. Any thoughts on that?
First of all, I think it's a hard question to answer because agentic AI is all of 5 months old.
Yeah.
We're still trying to figure out what it is, let alone where it's going. I think there are many, many different examples out there, and they all have very different characters and flavors of risk associated with them. I will say for myself, I am not about to authorize an agent to go out and conduct transactions on my behalf. And I don't think we've got a legal regime that really makes that a very safe proposition for anybody. So I think a lot of talk about that, but I suspect there will have to be a fair amount of legislating and regulating before the world is safe for agentic commerce at the individual level, right? But that's not all that we're talking about. We're also talking about agents that can run around inside your systems and collect documents. That strikes me as pretty useful. But in the world I work in, partner banks with fintechs, it's usually not just about running around inside the bank systems. What the banks would really like is agents that run around inside the fintech systems, right? What the regulators would really like is agents that would run around inside the bank systems. I think that's going to be a tough sell. I think, in principle, you can sort of understand how it might work, but, I venture to guess that if somebody came to me and said, we'd like to turn an agent loose inside of Claros' systems, I'd say, whoa, wait a second. And I don't think you're going to get a very different reaction out of really any kind of business. So I think it'll be a while before some of the more escalated visions of what agentic technology can do actually come to pass.
Yeah, I would think, just on my observation of the humans, is that some of the issues that are gonna have to get ironed out, most of which have analogs in the world that exists today. So who's liable when something goes wrong? How much proof of authorization is enough proof of authorization? How do you reverse stuff?
Yeah.
All that kind of exists in existing contexts, but I can guarantee you it's going to be a bloodbath when we actually fight, as we should, in a legislative setting about how this should work going forward. Because the liability is real, and it might have way more zeros than you think. And so I think it is going to be an actual project in a post-Chevron world. That means that Congress actually is going to have to take it up. So I don't envy that, but I do think that it's pretty critical moving forward.
Yeah. Ryan touched on the financial crime issue, and this also touches on that. But before we go to that, I will just share, and people may already know this, there are a lot of people working on how to equip the consumer with her or his own financial agent. May or may not be all the way to doing the transaction, but at least it would be gathering information. So protecting yourself from financial crime, this looks like a scam, helping you choose a good financial product, finding the hidden terms and so on. We know people don't read the disclosures and so on. And is this product a good fit for you? Potentially giving investment advice, which today would basically be illegal in some of the logical ways that people might try to use it. Helping you manage yourself, think through budgeting, or taking that off your mind and just, you could set it to say, I want to save this much money. Don't even tell me about the rest of the money that I'm getting this month. Just put it in my, in savings or investment account. All these kinds of things, which would have the potential to level the market dynamics, the market balance between the provider and the consumer, because it could potentially equip the consumer. The agent might check the reputation of the company and see, has it had a lot of complaints or enforcement actions or litigation, or is it perceived to have bad privacy protections, or, all of this is available now. So if that happens, then it seems to me it'll have a lot of implications for how we protect consumers. You could imagine if the agent was designed to be solely accountable for a fiduciary type responsibility, as opposed to having a secondary agenda of referring from another entity or selling your data or whatever. So worldwide, there's a lot of interest in this. And I do think maybe the first use case that I hear the most about is the potential for protecting people from scams and crime, which are skyrocketing, enabled by AI. So we've got, the economics of scamming people. Scams and fraud are now bigger than the illegal drug trade. They're just massive. They're funding more than half of the North Korean missile program. It's huge. And it's getting to be economical to scam somebody for, $20 instead of only going after real wealth. So how is AI? I think AI is clearly worsening this problem. So I'm interested in your thoughts on that, and then I'm interested in your thoughts on can we fight that bad AI with good AI?
I don't know. It's the honest answer. You know, when your comments about consumer protection in AI, you know, I think are very interesting, but they also, you know, if you start to think about agentic commerce, you're very quickly in a world where we've really got to rethink how we even do consumer protection. What does disclosure mean in a world of agents, right?
Yeah.
And so, you know, like if you've disclosed to an agent, have you disclosed it all? I guess in theory you could build the disclosures into the agents, right? They already know the information that they need to have disclosed to them. But who certifies that the agent actually is correctly informed, right? How do you decide which agent you can trust is a non-trivial problem. And there is no, at least today, until, you know, Congress sorts it all out, as I'm sure they will, you know, there is no licensing authority. Nobody is signing off. You know, my agent is just as plausible as your agent, is just as plausible as your agent. That's a real issue for consumers, right? And I don't, and are we just going to say, well, disclosure doesn't matter anymore? That doesn't seem like a step forward to me. But what's the alternative?
Yeah, I mean, the challenging part with sort of the, and listen, I would love it if somehow AI were able to save what otherwise is a pretty universally sort of derided disclosure regime in consumer finance.
Yeah.
Not just here, but like across the globe, right? Like, you know, it's something that we all do, even though everyone kind of admits, yeah, I literally never read the disclosures, which is a weird state of affairs. The problem with thinking that one or another agents will be able to deal with all of that and then recommend something to you or act on your behalf is that it feels like maybe what happens, you've just squeezed the air out of the disclosure balloon in one place, and now the agent has got to be disclosing to you in a way that gets some kind of, you've got to tell it what the box is within which it is allowed to operate. And so there are probably more sensible ways to render that disclosure regime going forward, but it doesn't eliminate the problem, not by a long shot. As long as we're talking about things that might go wrong, I am, in terms of this notion of like having agents move money for you, I do think that there is an unresolved question about if you could do this as a small business. I guess I run a small business. If I could have essentially a CFO, or even for middle market firms, which tend to have CFOs, but not like realistically, not like a treasurer in the way that you would think in a large corporate setting. Could U.S. small businesses suddenly get way savvier and way faster and more responsive to moving money around? Because if so, like, I don't know that the existing bank liability structure in the country, like, works in the way that it does today. Indeed, if you rewind 20 years, I would have thought that the notion of like relatively small commercial firms moving deposits en masse was like preposterous. And that's when there was a firm called Wachovia, right here. And so behavior can change. And like, you know, there are lots of people in the fintech world who like to pretend that somehow the bank credit corridor just somehow doesn't matter as some quaint anachronism. Yeah, it matters. And it works at least in part because you've got a liability structure that helps it work. And it would be nice to go with our eyes open into a world that might impair that somehow.
Yeah.
But other than that, everything's awesome.
Do you think that, again, nobody knows the answer to this. If you had to guess whether AI, between these options, AI is going to make the world much more centralized and concentrated. It's going to put power in the hands of the big players who will have, you know, infinite terrifying power. Or a second scenario would be, might it democratize and decentralize capability? Could it be the key to community banks being able to be highly efficient and competitive because it can change their cost structures, enable them to do more with less, and so on? Which of those is, I'm sure it's a mix, probably, but which of those is more likely?
I think it is a mix. And will there be more centralization? Yeah, I think there will be. But will we also see a lot of examples of companies, banks and others that buck that trend. Yeah, I think we'll see that too. I also, though, just looking at the companies we work with, a lot of the small banks, they're really struggling to figure out, I think in the same way businesses of all kinds are struggling to figure out, like, how do you make sense of this? Where's the right place to start? How do you put the pieces together? And it's a hard set of problems, and small banks typically don't have sophisticated technology leadership or senior management that's experienced with this sort of thing. It's a tough thing to negotiate, and I think many will not get it right.
But the AI is making it easier to do your tech tasks without being able to write code.
I'll tell you, I think before you even get to that, there are some very simple management problems that turn out to be very hard. How do you choose the right AI, right? There are a lot of vendors out there, oh my goodness, and there are more every week, and they all kind of look a lot alike. How do you decide which one is the one for you? And I'll relate, we made, after a considerable amount of effort, we made a decision to partner with a particular AI firm late last year. A good firm that had some scale, had Fortune 500 customers, big advisory firm customers. Their management team was lifted out in an acqui-hire about 90 days later. So now we've got a contract with what is in effect a zombie AI provider. That is a difficult risk to manage, but that's the kind of reality in which we're all shopping for AI solutions, banks and consultants alike.
AI is different in kind than many other technology implementations, but it is not different in this way. Post-AI implementations, plural, the cost base is more fixed, not more variable. And in a world with a cost base that is more fixed than it was before, you should expect further consolidation. And if anything, accelerating consolidation. I might be wrong. I can't possibly see how I am. I can't possibly see it. So I've been in this business how long now? 30 years around the US banking business, which has been a monotonic decline in the number of banks. I think that if you are holding your breath to think that this particular technology innovation, unlike basically everything that has come before, is going to reverse that trend or even create some kind of stasis, I would take the other side of that bet.
Yeah, me too.
For sure.
Okay, so we've got 2 minutes left. We've been talking about all these sort of terrifying types of scenarios. What is your best advice to the people sitting in this room when they get back to their desk Monday morning? What is the most important thing you think they should do or focus on?
Well, I'm sure a lot of the people in this room are already doing this.
They really are.
But I think to the extent that they're not, I don't think there is any substitute for getting your hands dirty. I think you've got to spend the time to play with some of these technologies, to learn how they work and how they don't work, to learn about the differences between them, and it's tough, right? I think as we were talking about this panel, one of the questions you asked is, how is this changing people's work? Well, one way it's changing for sure is that an awful lot of us are spending an awful lot of time just trying to figure it out, right? And that's time that has to come from somewhere, and that's not great. But I think it's essential, and I think you simply have to spend the time.
I would agree with that. I think that, and by the way, if this is a do as I say, not as I do kind of thing, like I'm not monkeying around creating a bunch of agents or using Claude code. Like that's just not how I want to spend my day. Like I feel like I've moved on. And so, but I think it's quite good advice. The thing I would think about as risk units is a little bit to go back to first principles and go back to sort of the engineering saw, like failure mode analysis. When this goes wrong, why would it have gone wrong? And just start from first principles and make sure that you're truing up to them with some regularity. Because my bet is, when something goes wrong, you're not going to have been incorrect in your assessment. It will be a bunch of stuff that is learned by virtue of the wisdom of time and energy and experience within this very sector and what you're doing today.
One thing we know for sure is it's not going to be boring, and it's going to be a mix of good and bad. So figuring out how to get the good and avoid the bad is going to, I think, be central to all of our work. Would you please join me in thanking our panel? Thank you so much.